All right, Matt Gougé, Get Better Everyday Podcast. I'm excited. I got my buddy Michael Wall from Time Capital. I want to talk about millennials investing. I want to talk about, the options that you guys have at Time Capital and how you're working with people, because when people think about real estate investing, they've probably got an idea of it and they think there's only one or two options. I know you're going to share with us today multiple options for people investing. So before we jump into it, let the people know, who you are, what is Time Capital, and we'll go from there.
So I am Michael Wall with Time Capital Group. I am the Director of Operations with Time Capital Group. And what we are an investment and educational company focused on real estate. So we instruct people on how to invest in multifamily, whether that's residential or commercial. And so we just bring them the knowledge and help them to grow their wealth.
Yep. I love that. I love that. Anything that starts with knowledge, there's a saying that a mentor of mine talks and says that's, knowledge drives confidence, confidence drives success. And
Very
so,
true.
start with the knowledge, teaching people a little bit, gives them the confidence to say, oh, maybe I'll invest some of my dollars here. So your average person who's maybe just getting started, I think a lot of the listeners, they've heard real estate's a great investment. It's one of the best, things to hedge against inflation. And, anybody alive today knows that inflation can be a problem when you're on the wrong end of it. What type of things do you have for somebody who's maybe just getting started? They don't have a ton of capital, but they want to invest in real estate. They want to be on the right side of this. Inflation works for those who own assets, right? Real estate's an asset. What kind of advice do you have, or what kind of path are you helping lead people down when it comes to starting out?
Well, based on where they're at financially, what we can do, let's say they have different techniques. I mean, you've probably heard the BRRRR technique. So they, say they buy a duplex, they start there and they live in one side and then they rent out the other side to help, offset that mortgage payment. And so from that point on, as they grow and they grow their wealth, then they can rent out both sides and then maybe move into a single family home with their family if that's what they want to do, or add to their portfolio or buy, either upgrade to a triplex or fourplex, or buy additional duplex. That could be a strategy. Or if they are a little more bold, then we can help them to invest in commercial multifamily. So multiple units, there's different ways to do that. They can own their own commercial multifamily property, or they can get involved in a syndication. So what we do is we teach just the basics on what that looks like. What is a syndication, first of all,
Right.
and then how do you get involved in that, and what are the rules and criteria to be able to invest in something like that.
Okay. Yeah. I think that's something that, people hear all these terms thrown around, and it's real estate syndication, and, they see Grant Cardone or somebody else online. What's a real simple explanation for somebody to understand if they don't know what a real estate syndication is, and maybe even an example of one that you guys have been involved in?
So really, syndication is basically you have a team of people who are on this, same path. They pool their money together. They put it all together to take down a bigger project. So if you are taking down, let's say, a $2 million property, and it's maybe a 20 unit, $2 million, but you don't have $2 million, well, you can maybe bring in 10 or 15 people, and we usually don't have the pool that big, but let's say 5 to 10 people to all put in the money to take down that project.
Okay. Yeah. And I would imagine too, on some of them, you don't necessarily have to raise 2 million. You might raise 500,000 for a down payment and then have a loan attached to it.
Yeah. So we raise, usually for the down payment and or repair. So if we're looking at doing a rehab, doing what we call a value add, then we raise for the value add and also the down payment for the loan.
Okay. Yeah. And that's something that, for some people that maybe have a, 50, 60 hour a week job that they're like, hey, I don't have the time, effort, or energy, I just want to throw some money at it. That might be something for them. For a real estate investor who might be brand new, like the example you gave with the duplex, I think that's something that's really, tangible and attainable for most people. What type of education are you giving people around, buying a duplex, triplex, or fourplex? I know in my world, 4 units and down is residential. So that's the financing I do.
Mm-hmm.
What do you do to help people kind of get themselves acclimated to
Yeah,
that.
I mean, I think what we really do is first we look at where they are financially. We help them run the numbers, make sure that they can, afford it. We send them to people like you, Matt, the mortgage guy, so you at least know what they qualify for, and then help them project the future. Where, how this is going to grow and appreciate, and then what they can do with that money down the road.
Yeah, no, I love it. And I think that like I can't preach it enough in a time where affordability is a big sticking point. Somebody's like $3,000 a month, $3,500 a month. It's too much. I can't afford it. You start showing them, well, if you buy a triplex and you use FHA and put 3.5% down, your capital outlay is not that much. Even if you buy something for 600 or 700,000, 3.5% of that is obtainable for an investor who's new. And then when you look at that mortgage and you say, oh my gosh, $6,000, when you've got two people paying $2,500 a piece and your
Right.
investment in it's only $1,000 a month, that looks a lot better than going out and buying a single family and $3,500 a month payment that people are
Right.
afraid of.
So, so they're bringing in money and they're paying down the principal and they're making profit for themselves, which
Right.
is which is amazing.
Right. Yeah. Yeah. I mean, that's something that, it's the dream for a lot. Instead of paying your landlord, you want to be the landlord. And,
Yes.
the things that people forget about is that property, like you said, the tenants are paying the rent, which pays your mortgage, which over time is going down. So every month, the principal amount
Yep.
that goes toward, you owe 660, then you owe 659, 658. And then on the other side of that is, an average that I've referenced in the past. The last 39 years in California, real estate has appreciated on average 6.9%. So $700,000 property that appreciates 7%. Quick math tells me that's $49,000 in 1 year.
Yep.
And then you've got the debt pay down, and then you've got the tax benefit. And so this is why, those of us that have been around real estate, we see the magic in it, and we say, it's possible for anybody. I'd love if you got any stories too, because I think that helps people kind of imagine it's possible for me too.
So, I mean, I put it this way: I didn't know any of this stuff in my younger years, and I had to learn it in my older years, which was good. But I wish I could have just passed that on, or that's why I want to pass it on to people who are younger. But what I understand is when you look at the big picture of investing in real estate. So let's say, um, how should I say? So when I had someone teach me about real estate investing, it was interesting to feel like when I first looked at apartments, I was like, there's just no way. There's no way I can do this. And then as I kept getting more and more educated on it, I'm like, you know what? So and so did it, so I can do it too. And so then I connected with a group that helped me to invest and learn to raise money, hundreds of thousands of dollars to be able to invest and take down a large property. So it can be done on either a small scale or a large scale. But the key is finding the right advisor or finding the right team to help you to do that. But then it can be done. And so, yes, I
Right.
was able to do that with thinking initially that there's no way I could do that.
Yeah. I mean, the best part about it for people, if you're listening and you're like, man, this sounds interesting, the education is free, right?
Yeah.
Whether it's on YouTube, whether it's connecting with, Michael and his team at Time Capital, whether it's you find a mentor at a local real estate meetup, like all the education is out there for absolutely free. And then once you've got that education and you feel empowered to go and do something, you guys have the real estate side where you
Yep.
can facilitate that and help people, put together offers. And I love it because I see it every single day. I see the
Yeah.
real life examples of, young man or young woman, no one in their family's ever owned property. They just didn't know what they didn't know and they've rented forever. And then, they go and they say, okay, I can put 3.5% down on this $400,000 duplex. And
Yeah.
they put together that down payment. We might structure a deal where the selling side pays for their closing costs. And so they're truly only out of pocket 3.5%. And quick math on 400,000 is, what is that? That's 12 plus 2, 14 grand, so $14,000 out of pocket. You own an asset worth 400,000. It's appreciating every month. The other tenant is paying, in most cases, more than half of your mortgage payment. And then you look up in 5 years and it's worth 575,000. And maybe you move out into something different. Now you've got two tenants paying, and collectively they're paying $4,500 a month, but your mortgage payment's only $3,600 a month.
Right.
Now you're putting $900 in your pocket.
Yep.
Your property's appreciating. You're writing off, interest and other expenses on your taxes. And to your point, like educating people when they're young, that's where the magic of real estate really lies, is holding it for long term, because you imagine that duplex that, if it's spitting off $900 a month now, what happens when you get it paid off?
Right.
And if you bought that when you're 24 and you get it paid off when you're in your mid 50s, like there's no better retirement plan, in my opinion. And, I could go on for hours about this, right? Like, how long Social Security going to be around? Maybe not when.
And that's the key. Social Security may not be around. This is also better than the CDs. Some, they're up and they're down, but real estate, and it's an asset that's right there. It's a hard asset. You always have it. I mean, and all of the other advantages that people, your tax advantages, your appreciation, your depreciation, all of these other things that are involved that I think a lot of people they don't understand because they're not exposed to it. But as you dig deeper into it, you start finding out things that, wow, this is a great tax write-off, and then because you hear the term that, oh, this is a tax write-off, and people are like, well, how is it a tax write-off?
Right.
But then when you really get in the nitty-gritty and someone who's educated tells you, okay, well, yes, you can do this and you can do this and you can save this amount on your taxes, you're like, wow, somebody should have told me that,
right.
10 years ago.
Right. Yeah. So somebody's brand new, they're 27 years old. They're like, hey, I got this pretty good job. I just got a raise. I'm making $77,000 a year. What's your advice to them? Where do they start? What's the first step?
Well, I think the first step is find out what your budget is. What can you afford? Understand that even though you're investing now, if you are good at handling your money, talk to Matt, the mortgage guy, and find out what you can afford. But put yourself on a path financially. Okay, in 5 years, this is where I want to be. If I purchase this home now and I'm paying down my mortgage, for 10 years, this is where I'm going to be. And if I'm bringing in, one tenant versus two tenants, this is where I'm going to be. And then take that discretionary income, put it in something that's going to grow, and which might be another piece of real estate or maybe another asset. But take that discretionary income, because you always want to, if you can, invest with discretionary income. Because that way, if for some reason something happens and you lose it, it doesn't affect your lifestyle. But start with a plan, A, B, and C. This is where I want to go. This is how much money I have. How can I take this and put it in the best investment to make it work for me? So that might be starting with a duplex or a fourplex. And we're there for them to start a plan. They give us a call, or they can reach out to us, and we'll help them walk that path.
Yeah, I love that because, some people might not know this, but, great real estate agent, seasoned investor, mortgage broker of 10 years, all our stuff is free, right?
Yeah.
And so you reach out to a professional, and what I've learned is sometimes somebody reaches out, they might not be sure of what the plan is.
Right.
I'm not sure of the plan either, but 10 minutes into the conversation, it starts to develop.
Yep.
What are your goals? How old are you? How much, discretionary income do you have? How much do you have in savings? And you develop that through a conversation.
Right.
If you never have the conversation, you might not never find it out. Right.
Very
And to
true.
your point about talking to a mortgage broker about what you qualify for, that is also going to become apparent as you start talking about it, because I'm showing you, hey, you qualify for a purchase up to $450,000 with 3.5% down. Here's what that mortgage looks like. And I've heard it time and time again, especially in today's environment. that mortgage payment's too much.
Yeah.
I'm not comfortable with that.
Mhm.
Even though you qualify doesn't mean that it fits in the budget. I'd rather have a mortgage payment that's this number that allows me to save a little bit per month. It allows me to, not be really strapped in case something comes up where I've got, medical to pay for my kids or whatever the case may be. So I think the reoccurring theme is education, talking to people who have walked that path, and can tell you,
Yeah.
here's what I know because of stuff I've experienced. And so I love all that advice. It's spot on. In the current real estate environment, are you seeing certain investments perform better than others? Are you seeing stuff that you're like, you know what, because of interest rates where they're at, because of the real estate market and prices where they're at, I'm seeing more people go towards this or towards that. What's your thought on that?
It's a very interesting market right now, and hearing a lot of things from a lot of high level people. So, multifamily is kind of where our focus is. And what we're finding is it's really that not that multifamily isn't performing, but there's less inventory that where the numbers make sense.
Yeah.
Um, Now on a higher level, it's where you invest because certain areas the numbers just don't pencil out. So if you're investing in California, it's very hard to make the numbers work. Um, Most people are looking towards the South. There's still some opportunity in Texas. So if they're investing outside of California in more business-friendly states, states that are secondary and tertiary markets, and where the path of progress is going, that's where people are finding deals and making money on a commercial level.
Yeah. And I've seen that in practice where, like you said, path of progress, you might buy an asset that you're like, hey, you know what? This thing isn't a home run. It might, give me a 5 or 6% return,
Mhm.
but then over time,
Yes.
like real estate over time is where the real magic happens. It's not a get rich quick. It's not buy
No.
Bitcoin at 4,400 and, see it 10X in 10 months. So when you're looking for path of progress where you're like, you know what, this is a deal that cash flows today. I can see, path of progress, people moving here, jobs coming here, where in 5 or 10 years, this thing might be worth double what it's worth today.
Right.
What kind of research, I guess, goes into that to figure out where those places are?
So you want to figure out one, where are the big boys going? Where's Walmart going? Where's Amazon going? What, where the big boys going? And also, what type of economic diversity do you have? Do you only have one industry that's holding that town together? Because if that's the case, you run away.
Right. That industry, they fold up shop and it's
Run away.
Right. Yeah. You don't want to be in Detroit whenever all the car companies left.
Right. So yeah, you want to find out, do they have health care? Do they have government? Do they have education? Do they have high tech? So you want to make sure that you have this diverse economic environment. That way, that if one industry folds, you're still going to be okay.
Right.
So that's kind of the main thing. And then, do you like that area? Because maybe there's just some areas you just don't want to be in.
Right.
If you don't want to be there, do you think other people want to be there? Sometimes, sometimes that is just a litmus test right there.
Right. Right.
know?
Yeah. And if you go visit your investment and have a tax write-off because it's a business trip, you want to make
Right.
it somewhere where you want to go. So I'm interested, 2024, what markets are fitting that criteria? Multiple industries looks like they're on the path of progress. What places are you seeing right now?
Right now, the Carolinas, things are happening there, are growing. I just had actually another agent, investment person reach out to me. She has a project in Georgia. So it seems like the South is
Mhm.
starting to grow. Secondary and tertiary. I had a person reach out to me about Tennessee. Even though they're kind of a big agricultural and industrial environment, but they're kind of looking at the forecast of that NAFTA freeway coming through.
Oh, wow.
So, I mean, there's still some more research I need to do on that, but that's where, people are looking, secondary, tertiary cities in the South. Some people are still in Texas,
Mm-hmm.
to Austin. So, Houston is obviously primary city, but there's still some areas around Austin that people are investing in.
Yeah, it's interesting to see because it's like different things to research, different analytics between the commercial side and the residential side, but it's still real estate.
It's
And so
still real
yeah, I
estate.
think about,
Mhm.
what I'm seeing on the residential real estate side where, man, Texas and Florida were booming and
Mhm.
everybody wanted to move there. And it seems like, that may have turned a corner where some of the hype has died down
Yes.
and
Mhm.
maybe there's some stagnant inventory in those markets. But yeah, interesting to hear about the Carolinas and Georgia because yeah, I've seen that same type of thing in the mortgage residential side of things. What are you excited about for the future, 25, 26 and beyond from an investment standpoint?
Well, for me, even though there's this area right now where it seems like there's a little bit of a stagnation, I still think there's opportunity. And the way on the commercial side, there's okay, you have two sides of the coin here. You have some people that say there's going to be this big hard crash for people who are investing in large multifamily and their loans are coming due. And so they're going to have to get rid of them because when they did their underwriting, they underwrote at X. And now because of inflation,
Right.
it's like,
4% higher interest rate
right,
when
it's
they got to
like, it's
refinance.
like,
Yeah.
how am I going to refi this puppy? So they're going to have to sell. They may have, so you may be getting real estate on the sale,
Right.
right? Some people think there's going to be a soft landing and there'll be opportunity, but it's not going to be this big crash.
Right.
So we'll see who's right.
Yeah. Yeah. And it's one of those things too, where like on the residential real estate side or on the commercial side, it's like where there's, maybe some pain and some stuff that was, ill-advised investments where they only worked at 3%. And so,
Right.
Your note is due and they got to refinance you. You can't do it. You might have to sell it for 60 cents on the dollar.
Mhm.
On the other side of that is opportunity, right? And so
Right.
there's going to be somebody on the other side that says, you know what, even at a higher interest rate, if I pay 60 cents on the dollar for this commercial asset, like I just had a buddy of mine, I think it was Oklahoma. He bought 70,000 square feet of commercial for a ridiculous number. This guy's a local guy here.
Wow.
And he bought it, I want to say like 15 cents a foot or something, where it was sub $1 million
Wow.
on 70,000 square feet of commercial. 2 deals were inked. I think it might have been a Starbucks and another major anchor tenant
Mhm.
that like 5x the value with that one tenant coming in.
Wow.
And so, I know there's opportunity.
Yeah.
And then you see a
Yeah.
real life example of it. You're like,
Uh-huh.
this is somebody I know. I've shook this guy's
Right,
hand.
right.
We've been in the same room. And so, yeah, it's exciting to think about. And it's cool that you guys are out there doing that research on that stuff, because real estate investing comes in all shapes and
It
sizes.
does. I
Yeah.
mean, and thinking about that's the other thing with real estate, just so much variety. I mean, obviously you could invest in notes, right?
Mhm.
Performing and non-performing notes, that way you don't have to do all the work. You're just collecting your
You're the
checks,
bank.
right?
Yeah.
But and then I talk to investors who are doing what they call quick service restaurants, like they take the buildings of the Jack in the Boxes and the Starbucks, and their focus is just doing the triple net leases with corporate tenants. So that's their baby. That's what they do.
Mhm.
Um, it's a little more high level, but it's out there. And then storage facilities, I used to see all these, storage facilities and go, oh, who buys those things? And how do you buy them? They're not, an easy thing to take down, but once you understand it, I mean, that's just another area that you can invest in. And on the residential world, you have people doing creative financing. So in a high interest rate market, well, they have a lot of seller financing and things like that. So lease options. And so there's like an array of techniques. So, but you got to start with the first step, right?
Right. Yeah. Yeah. You gotta get the education. Maybe you do a deal or two, that's smaller to kind of get your feet wet and realize like, oh, it is possible. As you were talking to, I thought to myself, every single year there's winners and losers,
Mhm.
so no matter
Yeah.
what's going on in the market, there's going to be people out there that are winning, storage facilities, multifamily, all of it. And I think the overarching theme that I want people to hear is if you want to be in the game, you want to have a higher likelihood of being on the winning side,
Right.
you got to get yourself educated. You got to get around people that, you know, are doing deals, are talking about deals, have done deals, have walked the path that you want to walk. So where can people follow and find you and Time Capital and connect with you guys?
So we are on Instagram, this Time Capital Group, and then we are on Facebook. We have a Time Capital Group Facebook. Our website is timecapitalgroup.org. And they could even, if they just want a conversation, they can call me 916-804-6445, and I'll pick up the phone. We'll have a conversation.
Awesome. I love it, man. Education drives confidence. Confidence drives success. Michael Wall, Time Capital. Thanks for your time,
All
man.
right. Thanks a
Yep,
lot.
for sure.